Good morning, student. Welcome you all once again in the second class on Ind AS 36 impairment of assets. So students, in the next 2-3 minutes, I will revise the first class and then I will solve one of the complex and large question on value in use, right? So good morning, Bibhu, Sanjay, Leela, Megha. Good morning,
Good
everyone.
morning, sir.
Good morning, sir.
Good morning. Yes. So, friends, in the last class, we understood and discussed the difference between depreciation and impairment, right? And why we picked up the difference between depreciation and impairment because both are something which decreases the value of the asset, right? And at times, when you read the formula of the carrying amount, carrying value, it also talks about cost minus depreciation minus impairment loss, right? Cost minus accumulated depreciation minus accumulated impairment loss. So we understood depreciation is kind of a very systematic thing, which you can plan, which you can estimate, right? But impairment is kind of one-off thing. You don't know. So everything is running fine today. But what will happen tomorrow? You don't know. A negative news can destroy everything. Likewise, if we talk about gaming company, have you heard that government has banned the gaming company? सुना है आप लोगों ने?
Yes, sir. Yes, sir.
Yeah. See, these gaming company, I know one of the CFO of the gaming company, and that CFO is my friend. You know, he was telling me, although that gaming company is kind of a startup, but that startup is earning a profit of 200-300 crores every year. A heavily valued gaming company in terms of valuation, in terms of profitability, they are earning 200-300 crores every year. They are having a turnover. They are earning from gaming worth 3,000-4,000 crores, right? But just because of a decision of a government, their going concern was questioned, right? And the assets are heavily impaired. Okay. So we understood the difference between depreciation and impairment. And friends, we in the last class we understood what is the meaning of impairment loss. We understood the objective of the standard. The objective is to ensure that no any asset in the balance sheet should be carried at more than their recoverable value. Okay, at more than their recoverable value. And friends, there are three type of standard which takes care of three type of impairment on assets. Number one, if the impairment is on financial instruments, financial assets, then Ind AS 109, so you will read Ind AS 109. So Ind AS 109 takes care of impairment on financial instruments. If there is an impairment on some specific assets, for example, deferred tax assets, inventory, non-current asset held for sale, biological asset. So impairment on these standards are inbuilt in the specific standard, right? For example, Ind AS 2 inventory say that your inventory has to be measured cost or market value, whichever is lower, okay? So friends, Ind AS 2 itself take care of impairment on inventory. So in that case, Ind AS 36 will not come into picture, right? But friends, what happens if there is no specific standard which talks about impairment? For example, PPE, intangible asset, investment property. This standard says that the formula of carrying amount is equal to cost minus accumulated depreciation minus accumulated impairment losses. But this standard does not tell you how to compute impairment losses. This standard does not tell you what is impairment losses, right? In that case, what will happen? You have to refer Ind AS 36. And Ind AS 36 says that impairment will come into picture if your recoverable value is lower than your carrying value. Okay. For example, in case of a PPE cost is 100 and depreciation is 20. So your carrying amount is 80, then you need to compare this 80 with the recoverable value. If recoverable value is 90, no problem. If recoverable value is 70, you have to book an impairment of 10 rupees. And this is how your equation will match cost 100, 20 depreciation, 10 impairment, carrying amount will become 70, which is equivalent to recoverable value, right? So friends, we discussed recoverable amount is higher of fair value less cost to sell and value in use. This is what we discussed, right? That recoverable amount is higher of fair value less cost to sell and value in use. We discussed fair value is a market value. The definition of fair value is given under Ind AS 113. So recoverable value you will compute in two manner. Number one, if you have the asset, I have a mobile. How can I get the future economic benefit from mobile? Either I will go to the market and I will sell the mobile phone. Number two, I will use the mobile phone, right? Either I will sell the mobile phone or I will use the mobile phone. When I will sell the mobile phone, I will have an immediate cash flow, right? And I will sell the mobile phone at market value. At market value means the definition of fair value, the definition of market value is the value on which market participants are ready to purchase. Okay? It's a market driven value. And friends, when I will sell any asset, I will have some cost also, cost of disposal. For example, if I'm going to sell my building, I probably have a legal cost, brokerage, stamp duty. Okay. So these are the cost of disposal. What is the cost of disposal? It's the incremental cost. Incremental cost means that cost which will arise only when you will sell the asset. Okay. Valuation fee. I have a mobile phone and I want to sell the mobile phone. So first of all, I hire a mobile consultant. That what is the value of this mobile phone? I purchased 3 years ago at 60,000 rupees. Okay. And it's 3-year-old mobile phone. So tell me the value of this mobile phone. So he do some market reiki. He should do some market intelligence. And then he will come back with a report. Okay. And friends, he will come back with a report and I will pay him 2,000 rupees as his consultancy fees. So now he told me, sir, your mobile phone value is you can sell maximum at 5,000 rupees. Friends, is it a cost to sell? Whether that valuation fee is a cost to sell? After hearing that 5,000 rupees, I said, no, I take a decision that I will not sell this mobile phone. Either I will gift this mobile phone to someone who is needy, right? Because after COVID, everybody need a gadget for the studies purposes, right? So I decided that 5,000 rupees will not impact in any manner favorably in my life. So it's better that I will give this mobile phone to somebody who is needy. So tell me, valuation fee is a cost to sell?
No, sir.
Valuation fee is not a cost to sell. It's not an incremental cost to sell, right? It's not something which will arise just because of your conduct of selling. But let's say I decided to sell my mobile phone. Okay, now if I need to sell my mobile phone, I need to do some bit of kind of packaging or something else so that it will come into a sellable condition. Okay, right? Means if I have to sell, I have to do that. Okay, so in that case, is it a cost to sell? Answer is yes, it is a cost to sell. Okay, so fair value less cost to sell. So fair value is computed, fair value will be taken from the perspective of selling the asset, from the perspective of market participant, from the perspective of selling the asset. Okay, and friends, if you will not sell the asset, you will use the asset. If you will use the asset, you have the cash flows. The cash flows could be positive, could be negative. What is meant by negative cash flow? Outflow. What is meant by positive cash flow? Inflow, right? So first of all, just print it in your mind. The standard talks about cash flows, not only inflows, not only outflows. It talks about cash flows. Means you have to consider cash inflow as well as cash outflow for computing value in use, right? What is the value which you are getting from using the asset? As simple as that, right? If you are getting cash inflow from using the asset, of course, you will incur the outflow from using the asset as well, right? So friends, value in use is, there are two aspects in value in use. Number one, you have to estimate future cash flows. Number two, you have to estimate discount rate. Okay. And friends, one more thing, in cost of disposal, you have to exclude. You are not required to include two aspects. What are those two aspects? You have to exclude. What exclude in cost of disposal? Income taxes and finance cost. Income taxes and finance cost. You remember?
Yes, sir.
Yes,
सुना
sir.
सुना लग रहा है ना?
So income
Yes,
tax
सुना
and
है.
interest charges.
Income taxes and finance cost, interest charges. Okay. For example, I want to sell a building and I know that the value of the building is 1 crore. I purchased it 60 lakh rupees. So when I will sell the building, don't you think income tax will also come into picture? Income tax भी तो
Yes,
आएगा ना?
yes,
For example, 40 lakh is my capital gain. Let's say 20% is the tax rate. 8 lakh will be my income tax. So sell this 8 lakh rupee. I take this as a cost of disposal. Answer is no. Standard has specifically says that you have to exclude income taxes and finance cost. So my dear friends, in the examination pressure, don't reduce income tax. The question will do all the efforts to confuse you. The question will write that the fair value of this building is 1 crore rupees and the company has purchased this building at 60 lakh rupees and this is and when the building will be sold out, then the capital gain will arise and the tax rate is 20%. So compute fair value less cost to sell, right? And if your mind is running like a supercomputer, what you will do? You will do cut. 1 crore is the fair value less cost to sell. Okay. 1 crore is the fair value. Cost to sell is 8 lakh rupees because of income tax arise, right? 92 lakh is my fair value less cost to sell. No. Your fair value less cost to sell in this case is 1 crore rupees, right? Clear? Friends, then in case of value in use, you have to estimate discount rate, which is more like an incremental borrowing rate. Okay. Discount rate is more like an incremental borrowing rate. Okay. Yes. Then friends, value in use, we discussed 3-4 aspects. Sanjay, would you like to tell me what we have discussed in the value in use in the last class? The cash flow, relating to cash flow. Any 2-3 points which you would like to mention, Sanjay?
we have to use the discounting factor
Yes.
and the cash inflows and outflows.
Yes.
Then we compute the present value, which would be the value in use for us.
Yeah. Yes. Saminathan, would you like to add anything?
Sir, when we are ascertaining the cash flow, should be estimated as an asset in the current condition. We should not estimate in the future condition. Say example, if any technological instrument involvement future, so the cash flow will increase. No. We should not include those items. And
Absolutely
also,
right.
yes, sir.
Yes, you are absolutely right. I think Sanjay and Saminathan, thank you so much. You're absolutely right. Anyone who wants to add? Anyone other than Sanjay and Saminathan? Anyone?
Greater weight should be given to the external evidence also.
Yes. Very good.
And financial budgets and forecasts should also be considered.
Yes.
Terminal
Yes.
value. Terminal value.
Sorry?
Terminal value.
Residual value. Very good. So let me summarize that. Okay. And I'm really happy that you guys are able to, remember and recall these concepts. Friends, cash flows, first of all, when you are expecting value in use, means you need to estimate cash flow, right? Then you need to estimate discount rate so that you can present value those future cash flows. Now the question comes, for estimating cash flow, right? For what period of cash flow you should consider? what kind of cash flow you consider, on which evidences you will give more weightage and importance, correct? So standard says that while computing the cash flows, you need to take the estimate for 5 years only until and unless the longer period is justified. Okay, you understood the meaning of this thing? For example, in the industries where capex are heavily invested, for example, aviation industry, for example, telecom industry, do you think that 5 year will give you a good value in use? Answer is no. In many industry, the cash flows, the break even will come in 8 year, 10 year, the break even will come, right? So the positive cash flows started arising after, let's say, 7, 8, 10 years. Okay. So in that case, the life of the asset is of course 20 year, 30 year. In that case, you have to take a longer period for estimating the cash flows, right? So number one, what standard says that about a period? Standard says that you have to take a cash flow for 5 year. You have to estimate for 5 year until and unless longer period can be justified. Number two, the weightage should be given to external evidence. For example, the question, you know how question will come? The question will say that the management estimated the cash flow of, 1 lakh rupees every year in the next 5 years. Who will say this? Question will say. Okay. Management estimated. Management means internal management. And the valuation report is saying, so while the management has also engaged a valuer, and the valuation report is saying that the cash flow in the first 3 years will be 2 lakh rupees, and in the last 2 years it will be 50,000 rupees. So to whom you will give more importance?
Register valuer, external.
Valuation report.
Yeah, we need to give the external confirmation is more reliable than internal.
Yeah, very good. Yes. And even this is your audit ethics. This is your audit principle. External confirmation has to be given more importance than internal confirmation.
Yes,
Right?
sir. SA 505.
SA 505. Okay. Yeah. So friends, number one, period should be 5 year until and unless longer period can be justified. Number two, the weightage should be given more for the external evidence, right? Time value of money should be given importance. You are aware that you have to do the discounting and computing the present value. Number three, as mentioned by Sanjay and Saminathan also. So yes, you need to estimate the cash flows in the current condition, right? So today you are saying that, today you are, studying for 5 hours a day. Okay. So you are saying that, after 6 months, when my exam will approach, okay, so just 30 days before my exam, I will start studying 12 hours in a day. So what you are expecting? So your current condition is 5 hours a day. You are saying that in future, when I will do this, when I will take leave, when I will take this, in that case, I will study for 12 hours a day. So whether you will be able to complete your course or not, whether you will estimate as per current condition, which is 5 hours a day, that if you can spend only 5 hours a day, so your syllabus will get completed in how many days? Will you estimate that way, or will you estimate after 6 months I will get an examination leave and then I will study for 12 or 14 hours a day and then I will be able to complete 3 subjects in just 1 month? So will you estimate like that, or will you estimate in the current condition, which is 5 hours a day?
In the current condition, sir.
इन द करंट कंडीशन आज के हिसाब से बताओ, वो लास्ट के 30 डेज बचेंगे, उसमें अगर मान लो तबीयत खराब हो गई तो क्या होगा?
तो गए सर.
Are you getting me? So it is contingent. The future is uncertain. The future is contingent. The last 30 days is left for revision, not for the preparation. Okay, right? So preparation comes before revision, right?
Yes, sir.
तो वो लास्ट का टाइम तो रिवीजन के लिए है. The more revision will there, the more and more preparation will be there. Okay. So this is just an example. This is just an example so that you will be able to remember. So friends, the cash flows from the asset has to be taken as per the current condition, not with the future. In future, the technology will come, we will able to save, we will able to invest. No. Okay. Number two, cash inflow and outflow from continuing use of the asset has to be taken. Number three, cash flow from the terminal value is also required to be taken. Terminal value means residual value has to be taken. Number four, the cash flow from taxes and finance cost is not required to be taken. Okay. So friends, these are the major aspect on the cash flows. Okay. These are the major aspect on the cash flows. And friends, discount rate we spoke. Discount rate is your incremental borrowing rate, that if you will borrow the money from the bank, let's say for 5 years, which is the tenure of the asset for which you are computing the value in use, for that amount, let's say 1 crore rupees, what is the rate of interest the bank will charge to you? Okay. So this is the concept of discount rate. Friends, I hope in 20 minutes, I am able to make a full revision of the last class.
Yes, sir.
I hope you are able to understand. And friends, one aspect more that we discussed that in the last class, impairment testing means computation of a recoverable value is a cost and effort intensive exercise. So friends, in that case, it's not like that every year you start computing the recoverable value. When you will consider recoverable value, when there is an indication of impairment, right? When there is an indication of impairment. Tell me one thing, either you guys are driving a car or you guys must have travel in a car. When the person who is driving a car in front of you, right? When he on the left indicator and you are running behind his car. So when he will on left indicator, then what you assume? You assume, okay, he has to go left.
Yes.
Then you will take a right, okay, or you will slow your car. When he put the right indicator, you understand that, you estimate that he has to go right and you behave accordingly. But if he will not put any indicator, he will not on left or right indicator, will you go straight or not?
Yes.
Will go straight.
You go straight.
लेकिन जैसे ही उसने इंडिकेटर ऑन किया, आप भी वैसे बिहेव करने लग जाते हो. इंडिकेटर लेफ्ट का, यू स्टार्टेड टेकिंग योर कार राइट. ओके. So likewise, if indicator exists, then only you need to compute recoverable value. Otherwise, no, your life is running as simple as it was running. Okay, right? So friends, but there are three assets. There are three assets on which you need to check impairment. Irrespective of the fact that indicator is there or not there. You are not required to wait for indicator. You are not required to wait for indicator.
Yes, sir.
कौन रेड लाइट होती तो आप सब रुकते हो ना?
Yes, sir.
Yes, sir.
राइट. सो
Yes.
ऐसी कौन सी रेड लाइट है जिसमें 3 एसेट को रुकना ही रुकना है, 3 एसेट को इम्पेयरमेंट चेक करना ही करना है, 3
Intangible
एसेट्स को
assets.
रिकवरेबल वैल्यू चेक करनी है. कौन से 3
Intangible
एसेट्स?
intangible assets having indefinite life, intangible assets not yet available for use, and goodwill acquired in business combination.
Very good. So Sanjay, thank you so much. Very good. So friends, yes, 3 assets, and all 3 are from which family?
Intangible family.
Intangible assets.
Intangible family. ये सब intangible के परिवार से हैं. All these 3 assets are from the family of intangible asset. These all have a house whose address is, इनका एड्रेस क्या है? Ind AS 38. They are from intangible
Yes, Ind AS
family.
38.
This family lives in Ind AS 38 And the member of the family are, as explained by Sanjay. Neha, who are the member of the family?
Sir, intangible asset.
नहीं,
Intangible
इंटेंजिबल
asset.
एसेट तो परिवार है, फैमिली के मेंबर का नाम बताइए.
Sir, intangible asset within an indefinite useful life.
Yes,
Intangible
indefinite
asset
life. Yes, indefinite life. Okay, very
and
good.
asset not yet available for use.
Very good.
And test goodwill acquired in a business combination.
Goodwill acquired in a business combination. Neha, can the goodwill be a self-generated goodwill?
Yes, sir.
Can the
No, no,
goodwill?
no, 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 no. Acquired.
Okay. No, self-generated goodwill cannot be there, right? Self-generated goodwill cannot survive. It cannot created. Self-generated goodwill is prohibited under Ind AS 38. याद है, मैंने आपको एक वो चार्ट दिखाया था एक स्लाइड में, जिसमें था इंटेंजिबल एसेट कहां से आ सकते हैं. Yeah.
Yes, sir.
So self-generated goodwill cannot be created. Why? Because it does not meet the criteria of identifiability. It is not separable, right, Bibhu? It is not
Yes, sir.
separable. Okay? It is not
सर
separable.
मतलब इस परिवार में एक विद डेफिनेट लाइफ एक एक्सपीरियंस आदमी आएगा, एक एकदम नया आदमी आएगा जो एक अवेलेबल टू यूज है, और एक बाहर का आएगा.
Oh, very good. So great, Bibhu. So I liked it. So Bibhu has given a very good trick. In this family, one, there will be a highly experienced man. Who is that man? Indefinite life. Second, there will be a new member who is a not yet available for use, infant. Third, bahar ka aadmi, guest, who is a goodwill acquired in a business combination. Very good, Bibhu. And I must encourage you, if you have a passion for teaching, go for teaching.
Yes, sir.
Yes. Okay. Yeah. So this is what we discussed. We discussed internal indicator, external indicator. Okay. And we discussed these aspects already. We did some question. We covered this aspect also. Fair value less cost to sell we discussed. Value in use we discussed. Okay. All these cash flows we discussed. Okay. Right. And what is not required, which cash flow is not included, we discussed that also. Discount rate we discussed, right? Foreign currency cash flows we discussed. Yes. It was very
Yes,
simple.
yes,
If
Yes,
there is
sir.
a foreign currency asset, what you need to do? You have to compute value in use in foreign currency. That's all,
फॉरेन
right?
करेंसी.
पहले foreign currency में निकाल लो, उसके बाद
फॉरेन करेंसी में
convert
डिस्काउंट रेट लगा के
the
चेंज कर दे.
present value using spot rate.
yes. So जो भी foreign currency का value in use है, whatever is the foreign currency value in use, convert it using a spot rate into the INR. As simple as that. Don't learn this. Okay. Do you need to learn this?
नो सर.
No,
Nahin?
no extra
Very good.
efforts required.
Very good. Very good. So we discussed this. Have we covered this illustration number 3, detailed illustration,
Yes,
right?
covered.
Yes. And friends, do you want me to take you through with a complex question on value in use?
Yes, sir. Please, sir.
Okay. And friends, and thank you, Saminathan, for wishing me Teachers' Day. And you all are my teacher, right? And I was thinking why you have wished me Teachers' Day today. So I understood that tomorrow is the Teachers' Day, but tomorrow the class will not be there. And hence you wished me Teachers' Day, and wishing you Teachers' Day to everyone, right? Everyone. You all are to my teachers, I would say. Like Bibhu has taught me that the trick, that how this can be remembered. Yeah, right. Experienced member, new member, and a guest and outsider. So every student is a teacher, I would say.
हैप्पी टीचर्स डे सर.
Yes, everybody is a teacher, and teacher is sitting in every student. I must say, and the biggest way of learning is teaching. If you want to learn something, start teaching. Teaching means coaching center खोल के अभी से मत बैठो. Teaching means try to teach to your friends, like when you are explaining something, it will get retained in your mind. Okay, try to explain. When you are explaining, you are also talking like a teacher. Okay. Yes, wish you all the best, and let's discuss let's discuss a comprehensive question on value in use. I like this question. Okay. Question number 2. This is a word file in which some complex question is there, and the detailed question we have covered in the last class is from this word file as well as from ICAI BOS material. Okay. Question number 2. I hope this word file is visible to everyone. Is
Yes,
it visible
visible.
to everyone?
Sir.
Okay. Okay. Question number 2, and please start taking notes. Notes means please start picking some important items so that when I will solve on the Excel file, you will be able to remember those facts. Okay. Yes. So friends, E Limited owns a machine. E Limited owns a machine owns a machine used in the manufacture of steering wheels, which are sold directly to major car manufacturers. Okay. So the first line only talking about the business model, right? Nothing more. The machine was purchased, and I'm reading like a student. Okay. Just focus that how I'm reading and how I will solve this question. The machine was purchased on 1st April 2001 at a cost of rupees 5 lakh. Okay, so the date of purchase is 1st April 20x1. The purchase cost is 5 lakh. Machine is PPE. Through a vendor financing arrangement on which interest is being charged at the rate of 10% per annum. So this machinery was purchased through a finance. Okay, vendor financing arrangement means vendor has sold this machine on credit basis and vendor is charging interest of 10% per annum. So what is the cost of this machine? 5 lakh plus interest or 5 lakh rupees?
5 lakh plus 10%.
5 lakh rupees the cost of the machine. 10% is the interest cost which will go to P&L. You remember we had a discussion in Ind AS 16 and 38 that the PP and intangible asset has to be measured at cash price equivalent. Right?
Yes.
Okay. Yes. Now, during the year ended 31st March 20x3, 1st April 1, 31st March 2, 31st March 3, after 2 years. During the year ended, E Limited sold 10,000 steering wheels. E Limited sold 10,000 steering wheels at a selling price of 190 per wheel. At a selling price of rupees 190 per wheel. What does this mean? Selling price is given, means 10,000 sold, multiply by 190, it will give you revenue. It will give you cash inflow. Okay. Right?
Right.
Yes, sir.
The most recent financial budget approved by E Limited management. What it is talking about? It is talking about some financial budget. Okay. Means it may be indicating the future cash flows. I don't know. So this is what I am thinking in my mind sitting in the examination table. Okay. Covering the period 1st April to 31st March 2008. Okay. So this budget is for 5 years. Might be the question is checking the impairment testing. The question is checking the recoverable value on 31st March 2003. Right? Because when you compute value in use, it is not past cash flow, it is future cash flow. यही करते हैं ना?
Yes, sir. Value in use fast cash flow only, inflows, flows.
Yes. Future cash flows. Okay. So including now it is saying that the most recent financial budget approved by the management covering the period this to this, including that the company expect to sell each steering wheel for rupees 200 during 3-4. Okay. So the estimated rate is given 200 rupees for the year 3-4, first year. The price rising in later years, in line with a forecast inflation of 3% per annum. What does it mean? What does it mean?
It is a future cash flows.
Will impact.
5% increase.
3%. It is saying that It is 3%, not 5%, 3%.
3%.
So in the question, in the next 5 years, first year rate is given. Rate multiplied by quantity is the revenue, is the sales. So here the rate is given, quantity is not given. Probably quantity may be given in the further paragraphs. The first year rate is 200, and in the next 4 year, the rate will increase by 3% every year in line with the forecasted inflation. So what is given? The rate at which the cash inflow will arise is given. So if in the first year it is 200, what is the next year rate?
2000 to 200.
206 rupee. What is the third year rate?
206 plus
103% of 206. 212.
212,
What is the fourth year rate?
218, 219 almost.
219 rupees. What is the fifth year rate?
225.
225. Yes, 3% escalation every year. Okay.
Sir,
During
we
the
take 2% acceleration on year by year basis or on 200.
see what is written here, Bibu. The price rising in later years in line with a forecast inflation of 3% per annum. So Bibu, if there is an inflation of 3% per annum, so every year there is an inflation. Today
Yes,
you are
sir.
getting something at 200 rupees. So at what price you will get tomorrow? Tomorrow means next year.
206.
So Bibu, what about the next to the next year?
It's then 3% of 206, na sir?
Yes, yes, that's what I'm saying. Okay, इन्फ्लेशन का मतलब ये नहीं होता कि जो आज प्राइस है, इन्फ्लेशन रेट 6% है, तो लाइफ टाइम वो 6% पूरा
Yes, sir.
आज से रहेगा. इन्फ्लेशन
That,
मीन्स एवरी ईयर इट इज गेटिंग एक्सपेंसिव एवरी ईयर.
yes, sir, that's my little bit confusion.
No. So just think like a professional. Okay. Inflation to every year things are expensive, right? When I
Yes,
was a
sir.
student, I will not take the name of the faculty. When I was a student at that point of time, these kind of free classes from Board of Studies was not there. And I did self-study, and at that point of time, the financial reporting was costing 3,500 rupees, right? 4,000 rupees. And when I become CA, I'm talking about 2007, till that time, the private tutors have increased the fee from 4,000 rupees to 12,000 rupees. And now, 5-6 years back, I heard that the fees is around 25,000-30,000 rupees for the financial reporting badge. So the kind of cost, the kind of inflation, it is on year basis. Every year things are becoming expensive, right? It's not only on the base year, it's every year. Okay,
Yes, sir.
year on year. So yes, now coming to the next paragraph. During the year ended 31st March 2004. 31st March 2004 means first year of the future, right? 3-4. E Limited expects to sell how much? 10,000 steering wheels. So what is the quantity? 10,000. What is the rate in the first year?
200.
What is the cash inflow?
It's 20.
200 multiplied by 10,000.
20 lakhs, sir.
20 lakhs. 20 lakhs. Okay. Now the number is forecast to increase by 5% each year. Now the quantity is given. The number is forecast to increase by 5% each year until 31st March 2008. What is the meaning of this line?
Means there is increase in quantity also, sir, by 5%.
By 5% each year means in the first year, in the first year, what is the quantity in the first year?
It's
10,000.
10,000, sir.
Sorry?
10,000.
10,000.
10,000 in the first year. What will be in the second year?
10,500.
Third year?
11,025.
11,025.
1025.
Yes, 5% each year. 5% each year. Okay, very good. E limited estimate that each steering wheel. So inflow, 5-year inflow we got.
Yes, sir.
Quantity, rate, inflow. Right now, the question is talking about outflow. E limited estimate that each steering wheel cost 160 rupee to manufacture, right? Which includes 110 variable cost, 30 fixed cost, 20 transport cost, right? 20 transport cost. So now, what will be your outflow? What will be your outflow? 160 rupee
160 rupees,
multiply by
10,000. So multiply by on the each year based on that number of quantities.
Yes. So based on each year quantity, and here you need to also take a consideration of variable cost and fixed cost. Fixed
Yes,
cost
sir.
will always remain fixed in
Fixed.
terms of total number. Variable cost remains variable. Variable cost remain fixed per unit.
Per unit. Yes, sir. It's
Yes.
like we are getting in a costing sheet.
Yes. So friends, this is an important paragraph. This is an important paragraph. 160 rupees the total cost. But this 160 includes 110 rupees variable cost per unit. When units are increasing, your 110 rupees multiplied by unit will be the variable cost. 30 rupees fixed cost. 30 rupees fixed cost means 30 rupees fixed cost means what?
Sir, for 10,000 into 30, and it will be fixed for all the remaining years when it's otherwise it's stated that it increases.
Will you do that? 30
Yes,
rupees
sir.
share
Yes,
of
sir.
fixed overheads. It is saying that 30 rupees share of fixed overheads. 30 rupees share of fixed overheads, right? So in this question, it is not saying this question has given a unit. This question has given a unit value. This question has not given a total value. So let me tell you,
Total
if
value will be, sir, 3 lakhs.
no, so in this question, so how can you know that the total value is 3 lakh only? This is the expectation. This is the future. Probably the cost is coming from the last year. So in these kind of question, when the per unit share of fixed, it is share of fixed overhead is given. So when this kind of things are given, so don't use this as a fixed cost. Use the entire cost as a variable cost for solving the question. Okay. Right? So in this case, 160 rupee you need to take for the computation of cash outflow in this question. Okay. So this is what I wanted to highlight.
Yes, sir.
But what happened? But what happened instead of this thing? Let's say the question says that the cost is 160 rupees, which includes the variable cost, and there is a 5 lakh rupees of fixed cost. Then
Then sir, with that apply.
you need to take 5 lakh every year. Okay, as a
Yes, sir.
fixed cost. Costs are expected to rise by 1% during 4-5 and then 2% per annum until 31st March 2008. So question is saying that in the first year, the cost is 160. In the second year means 4-5, the cost will increase by 1%. And then in the next 3 years, the cost will increase by 2%. Okay. During 2005-6, the machine will be subject to regular maintenance costing rupees 50,000. Costing rupees 50,000. Okay. The machine will be subject to regular maintenance costing rupees 50,000. Right. So what is this? What is this cost?
So,
It's
This is a maintenance cost. This is also a cash outflow, na?
maintenance cost only 2005 and 6 only we have to incur that
Yes.
cost.
So only in 1 year there is a maintenance cost. There is a planned maintenance. Only in 1 year you need to take the maintenance cost. Only in 1 year you need to take the maintenance cost. Okay. And this is cost of running. This is not the cost of investing in new technology. This is not a new capex cost. This is a maintenance cost. Okay. Clear?
Clear.
yes.
Yes.
Yes, sir.
Friends, then what is written? Then E Limited expects to invest in a new technology. Oh my God. God has heard me. In 3-4, in the first year, the company is expecting to invest in a new technology costing rupees 1 lakh. This is again an outflow for the
Yes.
purpose of value in use. This is again an outflow, right?
Yes, sir. When it's not committed, then we should not consider it. When it is committed on the year beginning itself.
So, Saminathan, whether question is silent or question is specified?
Cannot use.
If you expect to invest,
The
which means
question is not saying that it is committed,
Not
right?
considered this amount.
yes,
Yes.
sir.
So we should not consider this, right?
Yes.
Investment in new technology, investment in capex, we will not consider. Okay. This technology will reduce the variable cost of manufacturing each steering wheel from 110 to 100 and the share of fixed overhead from 30 to 15, subject to the availability of technology which is still under development. अभी पता ही नहीं technology का. See this 4-line paragraph. Whether this 4-line paragraph is of any use to you?
No, sir.
It is absolutely of no use to you. Okay. It is just to confuse you. Right? Okay. Then, my God, how long is this question? E Limited is depreciating the machine using the straight line method over the machine's 10-year estimated useful life. So, this life is 10 year. What was the cost of the machine? 5 lakh.
5 lakh. Yes.
5 lakh hi thi na cost of machine.
Yes, yes.
Yes, sir.
5 lakh on
5
1st
lakh.
April actually.
Yes. And 10 year is the useful life. Okay. And the current estimate based on similar asset they have reached the end of their useful life of the disposal proceeds from selling the machine is 80,000 rupees net of disposal cost. So what is this? What is this? This is 80,000 is what? Residual value.
Residual value.
Residual value.
Cost.
So do we consider residual value?
Yes.
Yes, sir.
Terminal value.
Terminal
Cash flow
value.
from continuing use of the asset and cash flow from the residual value. E Limited expect to dispose of the machine at the end of 2008 and E Limited want to dispose also. E Limited has determined a pre-tax discount rate of 8%. In the question, if pre-tax discount rate and post-tax discount rate both are given, which discount rate you will take?
Pre-tax.
Pre-tax, sir.
Pre-tax because you are ignoring tax. So you
Tax
have
value.
to take a pre-tax discount rate. Pre-tax discount rate. Always remember pre-tax. Why? Because you are not considering tax flows either in outflow or inflow. Okay. Assume a tax rate of 30%. Okay. No use. Determine the value in use of the machine in accordance with Ind AS 36 on 31st March 2003. Friends, how big is this question? How big is this question?
It's a very good question, sir.
Very good question, very lengthy question. Shall I solve this question on the Excel file?
Yes, sir.
It seems like a capital budgeting question also.
It's like a
Capital budgeting question seems
capital
like
budgeting question.
such
Yes.
a big question.
Sir.
Yes. So, but this question will clear all your fundas of value in use, right? Question number 2 of Word file. I hope my Excel file is visible to everyone. Okay. Cash flows and value in use. Okay. So compute. Akshay is there. Yes. Now I am solving this question. Cash flow. Okay. What was the sales quantity in the first year? 10,000.
10,000.
10,000 in the first year. 155. Any doubt on this calculation?
No
To
doubt.
anyone? So let me look at the selling price in the first year. What is my selling price in the first year? My selling
190.
price was 200, right? And it was increasing by what amount? 3%. 3% inflation. Just a minute. Is clear? We discussed this, okay, right? So what is
80,000.
80,000 rupees. 80,000 rupees. Residual value. And this will come in which year? Residual
7, 8.
value. Last
2007,
year.
8.
7 and 8.
Last year, 7, 8. So, estimated cash inflow. What is my estimated cash inflow? What is my total estimated cash inflow, friends? My total estimated cash inflow is this plus this. Okay. Right? Now, cash outflow. Now, cash out. इसके अलावा तो कोई कैश फ्लो नहीं था इनफ्लो में नथिंग वाज देयर
No.
cash outflow. In cash outflow, what was my quantity? So whatever I have sold, I will use that quantity for arriving at my cash flow also, right? Quantity and rate. So what is my quantity and what is my rate? Quantity. Same quantity I will take. And what about the rate? So same quantity I'll take, right? और तो कुछ लिखा नहीं है. What about the rate? What about the cost in the first year? 160.
160.
Then it was increased by 1%. It was increased by 1% in the first year and 2% in the next 3 years.
Yes,
So
sir.
increase by
1%.
1% and then 3%, sorry, 2%
2%.
in the last 3 years. So will increase by 1%. This multiply by 101%. Can I do? Then, so these are the rounded off number, right? So in the, if you want in the decimal, I can do in decimal also. Right, 102%, 102%, right? Increase by 1% and then 2% every year. Friends, then what is your cash outflow? What is your cash outflow total? What is your total cash outflow? This multiply by this from the continuous use of the asset, right? Is there any other cash outflow in addition to this? This was from the, this is the cost for the revenue. Okay. This is cost of goods sold. Is there any other cost also?
It's maintenance cost.
Maintenance cost. Okay. What is the maintenance cost and in which year? In 5-6. In 5-6, there was a maintenance cost of 50,000. Right. So what is my estimated cash outflow? What is my estimated cash outflow? Estimated cash outflow. What is my estimated cash outflow? This plus. Yes, any doubt, any challenge, any problem, any clarification which you want from me up to this level? Yeah. Or you all are okay? Because I have discussed while discussing the question also, right?
Yes, sir.
Yes, sir, very clear, sir.
Very much clear? Okay. Yes. So friends, now what should I need to compute value in use. So what should I do now? Net cash.
Net cash flow.
Right. So what is my net cash flow? A minus B. सर ये A और B क्या है ये तो बताइए. What is A and B? A is inflow, B is outflow. A, right, Vibhu? A minus B. So A minus B. This minus this. I hope I'm doing the right calculation. Okay? Right?
Yes, yes, sir.
Now you arrived at 5-year cash flow. Now, what you need to do?
Discount it.
You need to discount this cash flow. For discounting, what you will require? You will require present value factor. Present value factor at the rate of 8%. 8% is the discount rate, correct?
Yes, sir.
Yes.
So the timing of these cash flows are not given during the year. Is it during the year? Is it throughout the year? Is it in the beginning of the year? So what do you assume? What will you assume?
We
At the end
assume
of the year.
At the end of the year,
Year end.
don't apply the mind of Albert Einstein. Don't become Albert Einstein. You know,
Yes.
at times what people will do, at times people think of, okay, 4 lakh rupees is the cash flow for a year. So I will scatter this evenly in 12 months. Don't do that. Okay. Assume this cash flow at the end of the year. Okay.
End of the
For
year.
the
Yes,
sake
sir.
of simplicity. Right. So what is my discount factor? 1 divided by 1.08.
Do it.
Right. This is my discount factor. Okay. In the 3-digit. Okay. Then in the second year, 1 divided by 1.08 and so on and so forth. So now you got the discount factor. So then what is your present value? How you will arrive at present value?
Net cash flow multiplied by present value factor.
Yes, very good. You all are very smart. You all are my teachers. Great. Now what is value in use? What is value in use? Value in use.
Of these
क्या
present
है
value.
value in use?
Total of
इन
present
सबका
value.
total, the present value of the discounted cash flows is the value in use, is equal to sum of what? This plus this plus this plus this plus this. Your total value in use is 20,71,692. 20,71,692. I hope I have been able to understand this entire question.
Yes, it was quite simple.
That clear?
Yes.
20,71,692. Right. So friends, probably if you look at the answer, it may be differ by 1,000 or 1,500 rupees. So was that answer wrong or was this answer wrong?
No, both are correct.
Yes.
Both are correct.
Due to rounding of differences.
Due to
Approximation error.
rounding off. So friends, don't think about that thing. So take the rounding off up to 3-digit. When you are computing the discount factor, not rounding off, when you are computing the discount factor, take it up to the 3-digit. Okay, discount factor. Okay, and you can round off. Okay, just you can write an assumption. So in this case, PVF considered up to 3 points after decimal. Okay.
Okay, sir.
Right? That's all. I hope this question is clear to all of you. And after this question, I hope you guys have been able to understand the nitty-gritties of value in use. You guys have been able to understand how to compute in these kind of questions, right? Yes. In practical real world also, the problem has been solved in this manner, in the practical life also. Neha, is it clear? Megha, is it clear?
Yes, sir.
Yeah. For everyone, it is clear. Hemant, Leela, Ravinder. Okay, very much clear. Great. Have you enjoyed this question?
Yes. We just have to ignore this new technology wala jo hai.
Yes,
New
you have to
technology.
ignore this new technology. Yes.
Yes.
Yeah. So friends, now let's come to the next concept. Friends, impairment loss measurement we discussed. How do you measure impairment loss? Your carrying amount minus recoverable amount is equal to impairment loss. Where impairment loss will be recognized? कहाँ जाता है impairment loss?
We will reduce it from the cost or revalued amount.
No, if revaluation is not there. So
Profit and loss.
Profit and loss. Right. So revaluation में तो तब जाएगा जब वो revaluation model adopt किया है. But impairment can happen in cost model also. Right?
Right. Yes.
So impairment loss has to be recognized in the profit and loss account until and unless it is carried at revalued amount. And you are absolutely right. If you have opted for a revaluation model, and in the revaluation model, there is a revaluation surplus which is sitting. In that case, first you need to adjust with the revaluation
Revaluation
surplus.
surplus. Yes.
After that, you need to, if there is over and above, let's say revaluation surplus is 50 rupees, but your impairment loss is coming at 80 rupees. So 50 rupee you will adjust from revaluation surplus, where 30 will go?
30 will go
Profit and
to
loss will charge to profit and loss account.
30 will go in the profit and loss, right? Okay. Friends, impairment loss of a revalued asset should be treated as a decrease in revaluation. Okay. It should be treated as a decrease in revaluation, right? So decrease in revaluation means whatever revaluation surplus is there, you need to knock off, over and above, take it to P&L. Friends, if there is an impairment loss, for example, the cost of the asset is 100 rupees, life is 10 years. What is my first year end carrying value?
90.
90. 90 is my first year end carrying value. 100 rupees cost, 10 year life, 10 rupee per annum depreciation. 90 is the first year carrying value. At the end of the first year, there is an impairment of 20 rupees also. So now, what is my revised carrying value at the end of the first year?
70.
70.
Yes.
70.
Yeah.
Cost minus depreciation minus impairment loss. 70. Now tell me, what is my depreciation in the second year?
70 by 9 years.
70 divided by 9. Not 100 divided by 10. It is 70 divided by 9. So every year 10 rupees is not the depreciation. So whatever is the carrying value, that carrying value has to be depreciated prospectively over the remaining useful life. Is that clear? So it also says that adjust the future depreciation based on the revised carrying amount less residual value. And if there is any residual value, remember last class question that 500 lakhs was the residual value, and you guys forgot to reduce that residual value in the revised carrying value for computing the future depreciation.
Yes.
Yeah.
Yes, I forgot.
सुना सुना लग रहा है या सुना सुना लग रहा है?
सुना लग रहा है.
सुना सुना लग रहा है ना? सुना सुना तो नहीं लग रहा, ब्लैंक तो नहीं लग रहा.
नहीं तेरे सुना सुना नहीं लग रहा है.
Yes. Okay. You guys will always, when you become chartered accountant, I can bet even in the after 10 years you will be able to remember. One of my teacher was telling suna suna ya suna suna. Yeah.
I also remember clear in mind, clear from mind.
Clear in mind or clear from mind? Is it clear or clear? Yes. Yeah. Friends, now coming to deferred tax. Okay. While deferred tax has not yet been covered, right? Ind AS 12 is yet to be covered. Okay. So there is a deferred tax implication also. And you guys understand deferred tax, by the way? Have you seen the deferred tax calculation? Have you seen the deferred tax calculation during your articleship period, AS 22 in CA Inter?
Yes, 22.
आपको पता है deferred tax? Okay. Okay. So friends, deferred tax will come into picture when there is a timing difference, right?
Yes, sir. Not some permanent difference.
Yes. In Ind AS, the word is temporary difference. Okay. For example, there is 100 rupee of the asset, machinery. The useful life is 10 years. What is the depreciation in company's books? 10 rupee. In Income Tax Act, there is a concept of WDV. In Income Tax Act, 15% is the depreciation rate. 15% is the depreciation rate. So in Income Tax Act, tell me what is the depreciation in Income Tax Act?
First year it will be 15. And
first year it will be 15 rupees. So what is the carrying value in Income Tax Act?
It's then 85.
85. What is the carrying value in company's books?
90.
So now I will tell you a magic trick. So tell me quickly. So in your book base means your books of accounts, company's books. Carrying amount is 90. In your tax base means if you will prepare the balance sheet as per tax provision, what is your tax base?
Then book value
85.
comes 85.
85. Tell me on this transaction whether it will be deferred tax asset or deferred tax liability. Quickly tell me.
Deferred tax liability.
Deferred tax liability, sir. We need to reduce the asset.
Because we have got extra 5 rupees in income tax, so that will be tax liability for us.
And let me tell you one thing. This is one of the area where students will get confused in examination and professionals get confused in the real life. And let me give you a trick. This is the hand trick. So wherever you are sitting, please raise your both the hands like me. This is the hand trick. On the one hand, there is a book base. Book base means books of accounts. On the another hand, there is a tax base. Tax base means tax value carrying amount as per the tax provision. Okay. So on this hand, there is a book base. What is the book base? What is the value in the books of accounts? 90.
90,
What is the value in the textbooks?
85.
85. Okay. Now the concept of deferred tax asset, the concept of deferred tax is to align the book base with tax base, company's books with textbooks. So my asset is higher in company's books in comparison to textbooks. So what should I do to align? I will
Reduce tax.
reduce my asset.
Account book.
क्या करूंगा मैं? मेरा
Reduce.
जो एसेट है कंपनी की बुक्स में टैक्स की बुक्स से ज्यादा है. टैक्स की बुक्स में 85 है, कंपनी की बुक्स में 90 है. सो व्हाट आई विल डू? आई विल रिड्यूस माय एसेट. यस और नो?
Yes.
If I will reduce my asset, what does it mean? I will create a liability.
Deferred tax
I will
liability.
reduce a asset means what? I will create a liability. Which liability?
Deferred tax liability.
Deferred tax liability. So 90 rupee is the books amount, 85 rupees the tax amount. The difference is 5 rupee. So 5 multiplied by tax rate, let's say 30%. 5 multiplied by 30%, 1.5 will be the deferred tax liability. 1.5 will be the deferred tax liability. Will you be able to remember this hand trick always?
Yes, this is very simple to understand and to implement.
Yeah. So
Yes.
Megha is saying, yes, sir, I always get confused. Megha, now will you able to remember this hand trick? What is your book base? What is your tax base? Let me give you one more example. Provision for gratuity. सबने देखा होगा provision for gratuity. देखा है नहीं देखा है?
Yes.
Provision for gratuity in the balance sheet. What is this provision for gratuity? What is the nature of this item? Liability.
Liability.
It is disallowed, sir. Provision is disallowed.
Liability. Okay. So in companies books, as per accounting standard, as per Ind AS, you just keep on creating a provision. You are not paying. When you will pay? When the employee will serve 5 years and when the employee will leave the organization, then only you pay. Okay. At the time of death, at the time of retirement, or at the time of leaving the organization, provided 5-year tenure should be completed. Right? To be precise, 4 years and 8 months. Okay. As per the Gratuity Act. So in your company's books, there is 100 rupees of provision for gratuity. This is a liability in company's books. Income tax says that no, I don't know. I don't know these accrual concept. I will allow you this expense only when you will pay. So nothing has been paid. Provision for gratuity का मतलब ये हुआ ना, पे नहीं हुआ, तभी तो provision है.
Yes,
right?
sir.
So in income tax it is 0. In income tax it is 0. 0 का मतलब the number is in the company's books 100, income tax 0. So now I need to align this liability in company books with the tax books. What should I do? I will reduce my
Liability.
Liability.
I will reduce my liability means I will create a
Deferred asset.
deferred tax asset. 100 minus 0, 100 multiplied by tax rate 30%. 30 rupee deferred tax asset will be created on this transaction. Yes or no?
Yes.
I hope you found this magic trick useful. And this is my gift to all of you on the Advanced Teachers Day. Okay.
Thank
Thank
you
you
for
so much,
giving
sir.
the
We are blessed.
Yeah.
You are my blessing.
Yes. So Ravinder is also saying that I got always confused in this, but now it's clear in mind, sir. Very good. Very good. Yes. Always. This will help you in your real life also, professional life also. So my team member, I am also working in corporate, and my team member, whenever there is a balance sheet time, okay, and when they are preparing balance sheet and they are finalizing the deferred tax computation, they always, I have seen them on their desk, they are doing this and this. This, oh yes, DTA, DTL, yeah. They are always doing this,
Yes.
right? So they are just confirming, yes, we are right, it is DTA, it is DTL. Okay, yes. So friends, DTA and DTL are determined in accordance with Ind AS 12 by comparing the revised carrying amount of the asset with the tax base. Okay. So now let's do a question on the deferred tax in case of impairment. While we are not learning deferred tax right now, but since this impairment concept is not allowed in income tax, okay. So one of the question is given, let's solve that. हमने Ind AS, हमने deferred tax नहीं पढ़ा, but हमें compute करना आ गया. अब आपसे कोई नींद में भी पूछेगा ना, इफ somebody will ask you in your dream, you just need to close your eyes, do this. DTA, DTL. Yes, reversal of liability, DTA. Reversal of asset, DTA, DTL. Okay, so just do like that. Yes, friends, let's solve a question from ICAI study material. Mercury Limited has an identifiable asset with a carrying amount of rupees 1000. Its recoverable amount is rupees 650. The tax rate is 30%, and the tax rate is 30%, and the tax base of the asset is 800. So first of all, what is the carrying value? What is the carrying value?
1000.
What is the recoverable value?
650.
What is the impairment loss?
350.
350.
350.
350. Whether this impairment loss is allowed in Income Tax Act? No.
No.
It is not. Okay. And the question is also given, but since we all are chartered accountant, I am a CA and you are also future CA, right? So, and the question is also given, impairment loss are not deductible for tax purpose. Means Income Tax Act says that जब actual loss होगा तब मैं allow करूंगा. Notional loss I will not allow. Okay. So 1000 rupee is the carrying amount. Recoverable value is 650. What is your revised carrying value? 650.
650.
650, yes.
Yes.
Right. Impairment loss is 350. Tax rate is 30%. Tax base of the asset is 800. So what is your revised book base? What is your revised book base? 650. What is your tax base?
800.
800. What you need to do here?
We have to increase the asset.
Increase.
We have to increase the asset. Means increase the asset. Increase the asset means increase the asset. So you have to create a DTA. You have to create a deferred tax asset. Deferred
100.
tax asset to what extent?
150.
150 into
150 multiply by tax rate.
30%.
आप deferred tax का
Yes, yes.
estimate कर रहे हो ना?
It's 30%. Yes. Of 150.
So 150 multiply by 30% is
45.
45, right? Is 45. Okay. So this is what it is, right? Yes. So can you see the answer? Carrying amount is 1000. Impairment loss is 350. 650 is the revised carrying value. This is your book base. This is your tax base. Okay. This is your tax base. So this is your difference and this is your deferred tax asset. This is your DTA. Okay. This is your DTA. I hope this is clear to everyone. Yeah.
Clear.
Absolutely clear.
Absolutely clear.
Yes.
Clear,
Absolutely. Very good. So this is the answer. Anything which you need me to explain you more and more, or everything is clear? Akshay, is that clear?
Yes, sir.
Okay, very good. Yes. So friends, we have discussed this one more concept on this deferred tax also. And now let's move on to the next part, which is cash generating unit. What is meant by cash generating unit? Friends, I told you, we'll cover two aspects in this standard. Number one, individual asset. Number two, group of asset. And what is the fancy name of the group of asset?
Cash generating unit.
Generating unit. Cash generating unit. CGU. Cash generating unit. Okay. So friends, standard says that you need to determine the recoverable value for the individual asset. But if the recoverable value of the individual asset cannot be determined, it is not possible to estimate the recoverable amount of the individual asset, then the entity should determine the recoverable amount of the cash generating unit. Entity should determine the recoverable value of the group of asset to which the asset belongs. Okay. And in that case, you need to determine the recoverable value of the cash generating unit. And what is the cash generating unit? It's the smallest identifiable group of asset which generate cash flow independently. Right? So let me give you an example to understand it more. There is an assembly line. You understand the meaning of word assembly line?
Yes.
Sir, in the automobile industry, they used to produce the car in the assembly line. They will put it in the body in one place, one by one. They will car tire and all this thing. They will fit it everything. Finally, finished goods will come.
Yes, you are absolutely right. So this assembly line means chain of series of production process, right? When you put a raw material at this level, it passed through various machineries. It passed through various chain of production process. And this is how you got the final outcome at this level, right? And the product is sold and the product is ready to sold, available for sale, and the product is ready at this level. This is known as an assembly line. For example, there is an assembly line, and in the assembly line, there are 4 machines. Okay. Machine number 1, 2, 3, 4. There are 4 machines. 1, 2, 3, 4. So machine number 1 feeds the raw material, do some processes, and then it feed to machine number 2. Machine number 2 do some bit of modification, customization, refinement, and feed to machine number 3. Machine number 3 also do some bit of these tasks and feed to machine number 4. Machine number 4 throw the final outcome, which is ready to sell. Machine number 1, machine number 2, machine number 3. So the output which is generated by machine number 1, 2, 3, it cannot be sold in independent market, right? So whatever they are producing, that is not kind of a material, raw material, which can be used by the other participants in the market. So value in use of machine 1, 2, 3 cannot be determined. The value in use for machine number 4 can be determined. Okay. So the recoverable value of machine number 4 can be determined. The value in use can be determined, but for 1, 2, 3, it will not be determined. So the endeavor is determine recoverable value for the individual asset. So what we will do? We cannot determine the recoverable value of machine number 1, 2, 3. What we will do now? क्या करेंगे?
We will determine the value of complete group of assets.
In that case, we will determine the value of the entire group of asset, right? This is the smallest group of asset which can generate cash flow independently. Means when you feed the raw material, it will throw the car, this entire assembly line. So what I will do, I will estimate the recoverable amount of this entire assembly line. I will estimate the recoverable amount of this smallest identifiable group of asset. Okay. So friends, I will estimate the recoverable value of this entire group of asset. Okay. Entire group of asset. This is what I will do. This is what I will do. Is that clear? Is that absolutely clear?
Clear.
Yes. So
Yes, sir.
friends, I will take one more example, and with that example, it will get printed in your mind. And it's 8:26 now. Let's have a 12 minutes break, right? We'll start at 8:38. Will that fine for you?
Yes, sir.
Okay.
Yes.
Okay. Thank you so much. And we'll meet at 8:38. Okay. it is not possible to determine the recoverable value of an individual asset, then we should go for the cash generating unit. We should go for the group of asset. Okay. So we'll understand this question. We'll understand this concept with the help of this question from ICAI study material. Right. There is a bus company. How many of you belongs to Delhi or you have visited Delhi? How many of you?
Yeah, I live in Noida.
You live in Noida. Okay. So Noida and Delhi is one and the same thing.
Yes.
Okay. Anyone else? So Neha is from Delhi and Gurgaon both. Okay. Yes. So many of you have seen Delhi. In Delhi, there was a DTC bus, Delhi Transport Corporation, government
Yes.
buses, right? And there is a pass. So when I was student, when I was studying in college, so there was a 50 rupees pass, which you can get from the authority, and you are the king of Delhi then, right? In 50 rupees, you can travel as many as you can in any routes all across Delhi. Right? So likewise, there is a bus company. Right? There were a blue line bus, there is a DTC bus. Okay, there was a time when the blue line bus was also there. Blue line buses were the private buses. Okay? So bus company provides services under contract with a municipality, government, that requires minimum service on each of 7 separate routes. So there is a bus company and this company wants to operate in Delhi, and authorities told this bus company that you have to, if you want to operate, you have to operate at minimum of 7 separate route. 7 separate route, you understand? For example, one route is from Sahadra to Connaught Place. The second route is from Janakpuri to Mangolpuri. The third route is from Dilshad Garden to Rohini. Right? The fourth route is from Greater Kailash to Moti Nagar. So that is how you have to operate in 7 separate routes. Okay. So we will not sell you only one route. We will sell you minimum 7 routes put together. Assets devoted to each route and the cash flows from each route can be identified separately. So if there are 7 separate routes, of course 7 buses will travel. Okay. Right? 7 अलग-अलग buses होंगी ना?
Yes.
7 driver will be there. 7 conductor will be there.
Yes.
Yes. Fuel will be separate. In every bus, you will separately fuel the fuel, na?
Yes.
Okay. So the ticket collection will be separate. The passengers will be separate. You can't be omnipresent.
Yes.
Sanjay cannot say that. At the same time, I was traveling from Sadra to Connaught Place, Janakpuri to Rohini, right? And Greater Kailash to Moti Nagar at the same time. He can't be omnipresent. So passengers are different, ticket revenue is different, fuel is different, buses are different, driver is different, conductor is different, right? So all these routes have a separate asset, separate resources, everything is separate. Okay. In all these 7 routes, one of the route operates at a significant loss. One of the route is operating at a significant loss. 6 routes are profit making, 1 route is at loss. Should the company determine the recoverable amount for an individual asset or a cash generating unit? This is the question. Tell me the answer of this question. Tell me, what's your mind says?
Sir, for the goods and service level, there is a 7 separate performance obligation is there. At the contractual level, it is a only single performance is there. So it is a entire single unit is considered as a cash generating unit, sir.
Okay, what about others? What's your view? So the assets are separate. As per Ind AS 36, you need to determine the recoverable amount of individual asset. So these 7 routes are separate. The assets are separate, resources are separate, inflow is separate, outflow is separate. Shall we? And of course, one of the route is in losses. So indication of impairment exists. You need to do the impairment testing. You need to recover you need to identify the recoverable value. Now my question is what you will do. That's my question.
Sir,
So we will consider each route as separate unit of asset.
Each unit has a separate
Separate use, and each bus has separate unit. It will be considered as individual asset.
Okay.
sir,
So
the concept,
friends, you need to estimate the recoverable value, fair value less cost to sell or value in use. Okay, and value in use. So don't you think when this contract was given to this municipality, given by government to this bus provider, to the service provider, don't you think the objective of the municipality is to give a contract which includes 7 routes, and they have to operate at a minimum of 7 routes, right?
So license is given
And
for
so let
entertainment.
me complete first. So on these 7 routes, and they were aware that one of the route will be losses, and why the government has given this 7 routes portfolio. The government has given a 7 routes portfolio so that government will be able to give a mix of profitable route and loss making route. If the government would have given or would have offered only a loss making route to a company or to a bus company, nobody would like to operate. For example, there are 7 routes. In one route the traffic is very slow. Okay, in one route the passengers are very less. So on the day one the company know that I will be into losses in this route, but company know if I will opt for this loss making route, I will get 6 more routes which are profitable ones. So why entity is getting those profitable routes? Because of this one loss making route. Yes or no? Yeah. So when entity is projecting, I am giving you entity's view. Okay. When entity is projecting its cash flows, how entity is projecting cash flows? The entity is saying that in overall position, will I be profitable or will I be loss making? So the entity is looking at with the overall position. The entity is looking at from the perspective of overall dynamics, not the individual dynamics, overall dynamics the entity is looking at. So in this question, the contract is to put 7 routes together while the resources may be allocated, but the value in use has to be computed for the group of assets as a whole, because this 6 profitable route can't be operated unless this one loss making route has to be operated, right? So all these routes are complementing to each other, and collectively it is forming a contract. And if this entity will deny, I will not operate on this route because it's loss making, the entity has to drop the 6 profitable route as well. And hence this 7 route put together is a contract. And in this case, the entire resources which has put in performing these 7 routes put together will be classified as a cash generating unit, because this is the smallest identifiable group of asset which is generating the cash flows independently, right? So this is what which is given in the answer also. Because the entity does not have the option to curtail any one bus route, the lowest level of identifiable cash inflows, which are largely independent of the cash inflows from other asset or group of asset, is the cash inflow generated by 7 routes together. The cash generating unit for each route is the bus company as a whole. Right? I hope this is clear. To all of you.
So the cash generating unit here is the buses and the license put together.
Yes, you're absolutely right. You're absolutely bang on. The cash generating unit is the license to operate and the resources which have been deployed, which is buses. Okay. And what is the cash flows which you will see? The cash flow from this cash generating unit is the cost which you have incurred, your cost of what is the cash flow? The cash flow is, your your cash inflow from
Operating
running
cost.
buses for all 7 routes put together? क्योंकि आपको एक का नहीं देखना. एक का क्यों नहीं देखना? आप कहते हो जी मैं लॉस मेकिंग रूट नहीं अडॉप्ट करूंगा. देन व्हाट इज द implication?
The license will be
You
revoked.
won't get
The
that
license will
contract.
be revoked.
Yes.
You will not be allowed to operate on 6 profitable route also, right?
Yes.
It means on those 6 profitable route, this one loss making route has a contribution, right?
Right.
Tell me one thing. You are very good in practical, and in my student life, I never like this IT wala paper, information technology. क्या
Yeah,
बोलते थे उसको, MICS या
EIS.
sorry?
EIS.
Yeah, nobody
Enterprises
likes it.
Information System.
Yes.
EIS.
In CA Inter, there was one paper on IT, okay, and I never liked it. So let me very honest with all of you. And I was very good in accounts, right? I love costing. I love practical subjects very much. Right? I am good in theory also, but this IT paper I never liked. So when I went to examination and when I was preparing for examination, I told and I asked my God that God, please give me only 40 marks in IT paper. Only 40. Right. Not even 41. Not even 42. I need only 40 marks. Right. And let me share with all of you, I got 41 in the IT. And in CA Inter, I was behind 5 marks from the rank because my number was great in accounts, right? I was kind of all India topper marks in accountancy. And in other subject, I was having a good marks, 60, 65, 70, right? 58. That was that all, both group in the first attempt. So what I'm trying to say, I am trying to say that in this IT paper, I got only 40. My aggregate was great. So who has supported? Those other papers have supported. And if what will be the case if I would have got 39 in IT, then
Well,
my one group was failed. Yes or no?
Yes.
So can I say that this IT paper also, or whatever, this one paper out of 4 paper or out of 3 paper has a biggest implication on the group as well?
Yes, sir.
Yeah, you will not be able to crack the group until and unless you will be able to crack each and every paper with a minimum of 40 marks. Yes?
yes, sir.
So when you are appearing in your exam, don't think individually, think like a cash generating unit. The smallest identifiable group of paper is your group. Yes or no? Group 1, group
Yes,
2.
sir.
Yeah. So you have to see the recoverable value of the group, not the paper. Right? And for the group, you need 40 marks in each and every paper, and the aggregate should be 50%.
150.
50%, yes, 150. The aggregate should be 50%. Right? So in your CA life, the biggest example of cash generating unit is your group.
Yes.
Right?
Sir,
Yes.
sir, if the assets are dependent to each other, can we make it a summary that if assets are dependent to each other, they imply a cash generating unit?
If the assets are,
Dependent on each other.
yes,
We can say that.
you can say that. You can say that. Here also, this entire arrangement is depending on each other.
Dependent.
Right?
Yes,
So
due to that contract.
it's a contract. It's a contract.
Yes.
So one piece you will break, your entire chain will break. Correct. Your entire chain will break. Okay. Yes. So friends, cash generating unit, it's a group of assets, right? You need to identify the recoverable value on the group of asset. Then you need to allocate that. Right? So some theoretical bit. So cash generating unit is that minimum smallest identifiable group of asset which will be able to generate independent cash flows. Okay. Independent cash flows. And how management is taking a decision about continuing or you disposing the asset or operations, right? So accordingly, you will identify what is my cash generating unit. Okay, it depends on the business model. Highly theoretical part. So basically, your cash generating unit could be your factory, could be your plant, could be your location, could be your assembly lines. Okay, it depends on in the business in which you are operate. For example, you got one license to operate in 5 area. Okay, and if you will not operate in one area, your entire license will cancel. In that case, what is your smallest identifiable group of asset? That license and all the assets put together for those 5 locations. Correct? So it depends on the business model. It depends on the industry. Is it a manufacturing industry? Is it a service industry? So what kind of industry is that? So it depends on those aspects. Okay, right? CGU, whatever cash generating unit you have identified, it has to be applied consistently from one period to another until and unless the change is justified. For example, you say that my 5 location, my 7 route put together is a cash generating unit. In the next year, same you need to take until and unless a change is justified. For example, tomorrow the government will cut down from 7 to 5, then your 5 routes will become cash generating unit. So this is what it is given in the question. So goodwill is also required to be allocated to the CGU, right? For example, there is a goodwill. So you have acquired a company, and while acquiring a company, you paid a consideration more than the value of the net assets. So what is the difference? Difference will go to the goodwill. Okay, 100 rupees you paid, 80 rupee asset you acquired. Why you have paid 20 rupee extra?
It's goodwill.
It's goodwill. It's goodwill, right? It's a kind of an intangible asset, goodwill. Now, friends, when you acquire a company, you are foreseeing the future economic benefit in terms of synergies. And you have some existing cash generating unit also, which will get benefited from that goodwill. So what you will do? You will allocate that goodwill to the cash generating unit, to the assets. Goodwill क्या है? Goodwill is like a intangible power, invisible power. यही तो है goodwill. Yes or no? Goodwill is like an invisible power. So you will allocate this intangible power to tangible assets, to the group of assets, right? Which are generating future economic benefit. So standard says that goodwill has to be allocated to the cash generating unit, right? And in a systematic manner, in a consistent manner. This is what standard says that, right? So friends, cash generating unit with goodwill, intangible asset with indefinite life or not available for use. What does it mean? What does it mean? Friends, for example, there is a cash generating unit, and cash generating unit is a combination of assets, right? Like license, like buses, okay? So cash generating unit will have a goodwill also, right? So let's say there is and the concept which we have understood so far, we have understood the concept that if there is an indication of impairment, then only you need to estimate recoverable value, right? For an individual asset. हमने यही पढ़ा है ना?
Yes,
Yes,
sir.
except
हमने
those
यही पढ़ा है?
intangible.
Yes.
Yeah,
Yes. So if in case of 3 assets, intangible asset not yet available for use, intangible asset having indefinite life, and the new
Goodwill.
family member goodwill. If these 3 assets are there, then you need to estimate recoverable amount
Everywhere.
irrespective of the indicator. You don't need to wait for the indicator. Okay. So friends, it was for individual asset. Now I am giving you 2 scenarios. Okay. So let me take you on the Excel file. I hope the Excel file is visible to all of you.
Yes.
Is it visible?
Yes.
Okay. Just a minute. Yes. Yes. So cash generating unit. There is a CGU A. CGU-B. Okay. CGU-A has a PPE, intangible asset, which is intangible asset license. Life is 5 years. Okay. And inventory also. See, it's a CGU, inventory also may be there. Right. And goodwill. These are the 4 assets in CGU. In CGU-B, goodwill is not there. PP is there. Intangible asset license, let's say 10-year license is there, and inventory is there. Okay. So these are the kind of asset which is given in the CGU-B. Okay. Now tell me, in case of CGU-A and CGU-B, right? Question. Mandatory impairment testing or on the basis of existence of indicators of impairment. Tell me, what's your answer in case of CGU and CGU-B?
CGA is a mandatory. It has a goodwill, purchase to goodwill. And CGB is not needed. If there is an indication, then we want to do it.
What about you, Akshay? What's your view?
So same as it is. If the goodwill, in case of CGU-A, we have to do this mandatory impairment testing annually, and in case of CGU-B, only when there are indicators.
Absolutely right. Both of you are absolutely right. So the concept which is applicable on the individual asset has to be seen in line with the cash generating unit also. If a CGU is having, if a cash generating unit is having any of the 3 intangible asset on which the mandatory impairment testing is applicable, it has to be applicable to the CGU also. So in this CGU, goodwill is there, right? And on goodwill, you have to do mandatory impairment testing. So in that case, in CGU-A, you are not required to wait for impairment. In CGU-A, mandatory impairment testing will be there. Mandatory impairment testing will be there in CGU-A, right? Mandatory impairment testing will be there in CGU-A. What about CGU-B? As you have rightly mentioned, in CGU-B, since no any those 3 assets are present in this case, impairment only when impairment on the basis of impairment testing on the basis of indicator of impairment.
Indicator.
Okay. Impairment testing on the basis of existence of indicators of impairment. Impairment testing depending on the existence of indicator of impairment. Is that clear? Is that absolutely clear or clear?
Clear.
Completely clear?
Completely
Yes.
clear.
This is what it is written in the PowerPoint presentation. Okay. Right. So CGU with goodwill, intangible asset with indefinite life or not yet available for use, indication of impairment, test for impairment. No indication for impairment, test for impairment annually. Means if a CGU is having these 3 kind of asset and there is an indication of impairment in the first quarter, you have to do the mandatory impairment testing in the first quarter. But let's say in a complete year, there is no indication of impairment. Still, you need to do the impairment testing on an annual basis, right? मतलब अगर इंडिकेटर है तो और भी ज्यादा करेंगे, बट इंडिकेटर नहीं भी है तो एक बार तो करेंगे. इंडिकेटर नहीं भी है तो एक बार तो करेंगे. ओके, राइट?
Yes,
Okay,
sir.
right. Yes.
Clear?
Clear, sir.
Clear in mind?
Clear in mind,
Clear.
sir.
Clear in mind. Very good. And the CGU-B means those CGU where goodwill, intangible asset with indefinite life, intangible asset not yet available for use are not there. Then If there is an indication of impairment, test for impairment. If no indication of impairment, no test for impairment. Right? Clear?
Right. Clear.
Clear? Very much clear?
Very much clear.
Okay. So now allocation of impairment we need to discuss. Corporate asset we'll cover later on, but before that, allocation of impairment loss we need to discuss. And this we will discuss with the help of multiple example. Okay. So friends, cash generating unit. We understood that cash generating unit. What is the cash generating unit? For cash generating unit, you need to compute the recoverable value or fair value less cost to sell in the totality for a cash generating unit. And then if your total carrying value is higher than the total recoverable value, there is an impairment loss. And now the time has come when you need to allocate that impairment loss to the cash generating unit. Now, how to do the allocation, we need to discuss that. Okay. So friends, in this thing, like we discussed that impairment loss is required to be recognized in P&L except if the asset is on revaluation model, then decrease in value needs to be adjusted from revaluation surplus if any. Example, the same example I have taken from the Ind AS 16 PPE, right? So I have given accounting entry example, right? So that you will be able to refer this here as well, right? DTA DTL, we discussed this DTA DTL. Okay, so one of the additional example I have covered here also, right? So now allocation of impairment loss on cash generating unit. Friends, how to allocate that impairment loss? Assuming case 1, this is scenario number 1. The company has a goodwill of 20 lakhs, building of 30 lakhs, 20 lakh machinery, software 20 lakhs. Total value is 90 lakh. Total carrying value is how much? It is 90 lakh. Total carrying value is 90 lakh. It is 90 lakh. Total carrying value. Now, the recoverable value of the CGU is 60 million. Carrying value is 90, recoverable value is 60. What is my impairment loss on CGU?
30 million.
30 million.
30 million is the impairment loss on CGU. Compute impairment loss on CGU 30 million is so how to allocate the impairment loss on multiple asset of CGU and the revised carrying value post impairment. We need to do this. Friends, 30 rupees the impairment loss, we are aware. Okay. And the revised carrying value of the CGU will be how much? 60?
60.
यही होगा ना?
60 million.
60
Yes.
तो होगी ना? Carrying value 90, recoverable value 60, impairment loss 30. यही होगा?
Yes.
Now, the question is how to allocate this 30 rupee in these assets. These assets have a carrying value. So how to allocate this 30 rupee in these 4 assets? You suggest me, you help me. Neha, you help me. How we will allocate, because we have also read this impairment of asset standard in CA Inter AS 28. So Neha, please help me here. What
Sir,
should I
as,
do?
sir, as per your remark, firstly we will adjust to 20 rupees from goodwill, and after that 10 rupees will allocate in all of the 3 CGU.
So friend, standard says that, as rightly mentioned by Neha, the standard says that on one way you are saying you have an invisible power, right? So invisible power, and what is the benefit of having an invisible power? It will increase the value of your asset. Yes or no? Let's say if I am a new teacher, I am teaching on my laptop, I am teaching on my table, I am teaching on my chair. So I have some infrastructure. I am a new teacher. I may be able to fetch limited students on a limited price. But when my popularity will grow, if I will teach in a very understandable manner, my popularity will grow. In that case, what will happen? With the same set of assets, I will be able to earn more. Yes or
Yes.
no?
Yes, sir.
So what is running favorably? Same laptop, same table, same chair. I'm able to earn more. So which power is helping me, my tangible asset or something called intangible asset?
Intangible asset.
Tangible asset.
Your
Hmm?
way of your way of teaching in an understandable manner.
Yes. So basically my repo, my reputation, my brand name, my image, right? So when you will pass your exam, you will say you will tell your friends that you can take a session or you can take a class from CA Dr. Alok Garg sir, right?
CS Dr. Alok Garg sir.
CACS Dr. Alok Garg sir, you can say that, okay? So the point is, and why I'm telling you this story, you will be able to relate that. So goodwill is working here. Same laptop, same table, same chair, same person, right? He will be able to earn more from these set of assets. Why? Because the goodwill is working. The goodwill is helping. Invisible power is helping, right? But if the value is declining, my future economic benefit from these assets, my value is declining. What does it mean? मेरी वैल्यू कैसे गिर सकती है? अगर वैल्यू ही गिर गई इसका मतलब गुडविल तो कुछ भी नहीं है ना. इसका मतलब द फर्स्ट इम्पैक्ट वेयर आई शुड गिव
Goodwill account.
Goodwill.
goodwill account. So friends, this is what standard says. Standard says that when there is a
Impairment loss.
there is a impairment loss on cash generating unit, first you need to adjust the goodwill to the extent of impairment loss. First adjust the goodwill to the extent of impairment loss, right? Sir, but we have an impairment loss of 30 rupees. Here only, only 20 rupees the goodwill. What about 10 rupee? What about 10 rupee?
Allocate them in the CV carrying value of the assets.
Yes. Allocate 10 rupee in the carrying value of these assets. Allocate 10 rupee in the carrying value of these assets. Okay. Is that clear? Is that clear?
Clear.
Yes, sir.
So friends, how can I allocate 10 rupee? Minus 10 multiply by 30 divide by sum of what?
70.
30, 20, 20.
30, 20, 20 divide by 70. Can I write 70? You will be able to remember this. ये
Yes,
टोटल
sir.
करके दिखाऊं. चलो मैं टोटल करके दिखा देता हूं. This plus this plus this. Okay. Yes. Right. Then minus 10 multiply by 20 divide by 70 कर दूं.
Yes,
Divide
sir.
by 70. Minus 10 multiply by 20 divide by 70. And इसका total is 30. Yes. Now what is the revised carrying value? This
60 million.
minus this minus this मतलब नेगेटिव में नंबर है तो प्लस करेंगे. मेरी बातों पे मत जाना. Sir, you told me this minus this. So means you have to reduce. नेगेटिव नंबर है तो प्लस करेंगे ना.
Yes.
Yes. You all are my teacher. Okay. Yes. So 60 is the revised carrying value. Have you understood this point? Yes or no? Then I will increase the complexity level. This is the basic level. So in
Yes,
the
sir.
next two situation, I will increase the complexity. But have you understood this thing?
Yes, sir.
Understood.
Yes, sir. Clear till here.
Yeah.
Clear till here.
Clear?
Till here.
That's a clear till here. Okay. Clear till here. Okay. Okay. Fine. Fine. Yes. So this is your first level. Anyone who is not clear, any question, because now I'll move to more complex situation. That is why I'm asking. Okay, everybody is saying yes, clear. Everyone is saying clear. Clear. Okay. Yes. Now let's go to the case number 2. Let's go to the case number 2. In case number 2, there is a goodwill. Okay. There is a building, machinery and software. The value is 20, 30, 20, 20, 90. The recoverable value of CGU is 60 million. Compute impairment loss on CGU. What is the impairment loss on CGU? If 60 million is the recoverable value?
30.
30 million. Yes. Compute impairment loss on CGU and show how to allocate the impairment loss on multiple asset of CGU and the revised carrying value post impairment. The recoverable value of the building is 32 million. What is new in this question? What is different in the case number 1? What is different in case 2 in comparison to case number 1? What is
Recoverable
Total value of building is given, sir.
recoverable value.
Carrying value.
The recoverable value of building is given in the question, which was not given in the last question. Okay. So, and what is the carrying value of the building? What is the carrying value of the building?
30 million.
30 million. Just think about a group of asset. Okay. Let's say a group of asset has 4 assets. Okay. Goodwill, building, machinery, software. This building, recoverable value can be identified separately, right? So recoverable value of building can be identified. So impairment loss on building can be identified separately, but this goodwill, machinery and software cannot be identified separately, the recoverable value. That is why they have been clubbed with good building to form a CGU and then find out the recoverable value. So one thing, let me tell you, CGU के जितने भी assets होते हैं, all the assets of CGU not necessarily does not have their individual recoverable value, not necessarily. CGU के सारे assets कि इंडिविजुअली किसी भी एसेट की इंडिविजुअली रिकवरेबल वैल्यू नहीं हो सकती, ये ऐसा गलत है. सीजीयू के अंदर कुछ एसेट्स की इंडिविजुअल रिकवरेबल वैल्यू भी हो सकती है, लेकिन कुछ की नहीं है, इसलिए उनको इनके साथ मैप करके एक ग्रुप बना दिया गया. राइट, उनको मैप करके ग्रुप बना दिया गया. राइट, ओके. When I was studying in my school days, you know what was happened in my class. So let's say I was class 8 student. In my class 8, there was 5 sections. In my class 8, there were 5 sections. Okay, and in 5 sections, basically, you know how the students are allocated in the sections. Let's say total 100 students are there, and 20 students has to be allocated into 5 sections. There will always be a mix of intelligent student, average student, and the dumb student. Always a mix. It's not like that all the intelligent student will sit in a single class. Okay, all the average will in a single separate class and the dumb in a separate class. No, it is a mix, so that every level of people will get gel up. The dumb and average will get motivated from the intelligent. Intelligent should learn how to be partner with the kids of the less intelligence. Okay. So the point is, if the intelligent student, 1 or 2, where highly intelligent student, 1 or 2 student will always be part of a section. Okay, one section. It does not mean if they are part of a section and the teacher is saying this is average class, average ही बोलेंगे ना. अगर 20 में 2 intelligent हैं और 18 average हैं, तो class का weighted average क्या होगा? Average और intelligent? Average ही होगा ना, class का weighted average. तो अगर class के बारे में कहा जा रहा है this is a average class, तो does it mean those 2 intelligent students are average?
No.
Does it mean that everybody is scoring 60 out of 100, so they will also score 60 out of 100?
No.
No,
They
right?
will score more.
No. So why they have mapped to a group to make it a group, right? It does not mean they don't have their own intelligence and they don't have their own value. It does not mean. Okay? Understood? Clear?
Clear.
Yes, sir. Clear,
Very much
sir.
clear? Very much clear. So likewise, this building has a recoverable value of 32. Okay. And the carrying amount is 30. So the recoverable value of the building is higher than the carrying value of the building. Do you think that this building expects an impairment? Is it a justice to this building
No,
to allocate an
no,
impairment?
no.
No, sir, not needed.
If you are saying no, how can ICAI will say yes? How can standard setters will say yes? How can International Accounting Standard Board will say yes? They don't have guts if you are saying no. So they have also talked in the same language in which you are talking. They said no, right?
I am the student of Alok Garg, sir. Dr. Alok, CA, Dr. Alok Garg. That is what I am saying. No.
And friends, in this case, 30 rupees the impairment loss. So how will I adjust this impairment loss? First of all, I will hit my goodwill. I
Goodwill.
will make the goodwill 0. Now I'm left with how much allocation I'm left with?
10.
10.
10 rupees. So will I charge any impairment loss to the building?
No.
No, answer is no. So
No.
my dear friends, first you need to adjust the goodwill to the extent of impairment loss, then adjust the other asset in proportion to their carrying values. But you need to consider one thing. You need to consider if recoverable value of any particular asset in the cash generating unit is more than the carrying value, then no impairment loss is required to be allocated to that asset. Okay, so it will become same 30. Now this 10 rupee has to be allocated pro rata in the ratio of which 70 or 40?
20 is 20. 40.
50,
50 to
50.
20 in the ratio of these two assets. 20 divided by 40 minus 10 multiply by 20 divided by 40. Is that clear to everyone? So in this case, goodwill written off, recoverable value is more than carrying value, hence no impairment loss. Individual recoverable value, individual. Hence no impairment loss is to be allocated. Impairment loss allocated on pro rata basis, Any doubt? Because I will increase the complexity level in the third scenario. Any doubt here?
No, sir.
Is it clear or clear?
It's clear, sir.
Absolutely clear?
Crystal clear, sir.
Crystal clear. Very good.
Crystal clear.
So shall I make it more complex?
Yes, please.
Yes.
Add some more spices to this food?
Sure, sir.
Akshay, is it clear?
Sir, yes, sir.
Okay.
Yes, sir.
So now let me add more chili to this particular dish. Okay. Case number 3. Goodwill building machinery software, 90 rupee carrying value. The recoverable value of CGU is 60 million. Compute impairment loss on CGU, show how to allocate the impairment loss on multiple asset of CGU and the revised carrying value post impairment. Right. What is the impairment loss on this CGU?
30 million.
30. The recoverable value of the building is 28 million. Recoverable value of the building is 28 million. What is different in comparison to the case number 2?
Here,
Recoverable.
Here?
Impairment loss is there, but of minimum amount.
So here the individual recoverable value of an individual item in the CGU is given.
Yes, sir.
And that individual recoverable value is less than the carrying value of that item. Okay. So, and it is 2 million. It is 2 million, right? So 30 million is the carrying amount, 28 million is the recoverable value, 2 million impairment loss is given. Now the question comes, how we will allocate this 30 million of impairment loss?
Sir, first we will allocate goodwill.
First we will adjust goodwill. Okay, then
we will see on the pro rata basis if the amount of impairment loss is less or greater. If it's greater, then we will give the building of same amount, individual amount, and then we will do pro rata for other asset.
Then I will see pro rata first. So pro rata means 10 multiplied by 30 divided by 70.
70,
It is
sir.
coming 4.
Yes.
Shall I take this or shall I take individual asset
Individual,
impairment loss?
sir. Now we will take
Individual
individual.
asset impairment loss. So the allocation of impairment loss should not be more than its individual impairment loss. It's individual impairment loss. So minus. Okay. So now how much amount is remaining? How much amount is remaining?
2 million, sir.
8 is remaining, right? So minus 8 multiply by 20 divide by 40. Minus 8 multiply by 20 divide by 40. Okay. Yes. So what is my revised carrying value? What is my revised carrying value? My revised carrying value is
60 million total.
Is that clear? Is that clear
Yes,
or
sir.
not clear?
Yes, sir.
Clear,
Clear.
sir.
Very much clear? Absolutely clear?
In this case, we have to first check the individual impairment loss of the building. If it is more than its allocated impairment loss, then we have to take allocated impairment loss. Is that right?
If the individual impairment loss
is higher than the allocated impairment loss.
So then you have to take the higher impairment loss.
Okay.
Yeah. Okay. Yes. So we discussed the allocation of impairment loss concept. Now, so this is nothing. Yes. So now let's discuss illustration number 20 of ICAI study material. XYZ Limited has a cash generating unit, plant A, as on 1st April 2001, having a carrying amount of 1,000 crore. So what is the CGU here? Plant A. And what is the carrying value on 1st April? 1,000 crore. Plant A was acquired under a business combination and goodwill of 200 crore was allocated to it. Plant A was acquired under a business combination and goodwill of 200 crore was allocated to it. Okay. So what is the value of the goodwill? 200 crores. It is depreciated on a straight line basis. Plant A has useful life of 10 years with no residual value. Okay. So this 1,000 crore rupee is the value of the plant and 10 year is the life. No residual value. What is the value of depreciation?
100 per year.
100
crores. On 31st March 2002, plant A has a recoverable amount of 600 crores. Calculate the impairment loss on plant A. Also prescribe its allocation as per Ind AS 36. First of all, there was a plant A and a goodwill was also allocated to it of 200 crores. So what is the total carrying value of this CGU? What is the total carrying value? The total carrying value of the CGU is 1,200 crores, right?
Yes.
At the end of the year, on 31st March 2002, at the end of the year, what you need to do at the end of the year?
Impairment testing.
Carrying amount.
You have to depreciate it, right? So at the end of the year, what is the carrying value? Carrying value क्या है at the end of the year? 1,100 crores is the carrying value. ये पूछ रहा है ना 31st March 2002 पे recoverable value दी है. तो 31st March 2002 पे आप carrying value निकालोगे ना?
Yes, sir.
Yes. And what is the recoverable value? So carrying amount is 1,100, recoverable amount is 600. So what is the impairment loss?
500. 1,100 minus 600. 500.
1,100 minus 600, 500, na? So this 500 needs to be allocated in two assets, goodwill and plant. So how will you allocate?
For goodwill 200, balance 300 to plant.
Yes. First you need to finish off the goodwill, right? You need to slice the goodwill first, and then whatever is remaining, it has to be allocated in the other assets on a pro rata basis. So 300 is the other assets. Okay. Clear or clear?
Clear.
Absolutely clear or not clear?
Absolutely clear.
Absolutely clear. Okay. So this I will cover after corporate asset. Yes, this is the question on the corporate asset. I'll cover later on. Okay. Yes. Reversal of impairment loss. Reversal of impairment loss I'll cover later on. So let me solve one more question, right? And just allow me a second. So let me find out one good question on this.
Hello.
Sorry. Just allow me 1 minute, right? I'm just opening a question to solve. Yes. So question number 3. Question number 3 of this Word file. I hope it is visible.
Yes, sir.
Visible.
Word file is visible.
Yes, sir.
On 1st January, on 1st January year 1, on 1st January year 1, entity Q purchased a machine costing rupees 2,40,000 with an estimated useful life of 20 years and an estimated zero residual value. What does it mean? What does this mean?
We have to take the depreciation of 12,000 per annum.
We have to take the depreciation of 12,000 per annum, right?
Per annum.
Okay, 2,40,000 divided by 20 years. Depreciation is computed on straight line basis. The asset had been revalued on 1st January year 3 to 2,50,000. So the asset had been revalued on 1st January year 3. So this value was on year 1, right? It was purchased in the 1st January year 1 and it has been revalued on 1st January year 3 means after how many years? After
3 years.
After
3 years.
3 years or 2 years?
2 years.
1st January year 1, 1st January year 2, 1st January year 3 तो 2 साल ही तो हुए ना?
2 years, sir.
2 years to 2,50,000. These things play a very important role, right? So you should be very clear on the year, number, count very much. क्योंकि ये 2 से 3 ना आपका सॉल्यूशन ही खत्म कर देगा. So in year 3 the value is 2,50,000. So means from 240 it has increased to 250. 10,000 has been increased, right? Right?
But we have to take the depreciation for 2 years.
2 years, 24,000.
Carrying value would be 2,16,000 after 2 years.
Not right. You are absolutely right. I am not right. First, you need to compute the carrying value after 2 years. The carrying value after 2 years is not 240. You have to charge the depreciation for 2 years. The depreciation for 2 years is 24,000. 12,000 multiplied by 2, right? So what is the carrying value at the end of the second year? Means 1st January year 3 carrying value क्या होगी?
2,16,000.
2,16,000. तो ये 216 से 250 हुआ है ना कि 240 से 250 हुआ है. ओके?
Yes.
Okay?
Yes.
Okay.
Clear in mind?
Clear.
Clear in mind. But with no change in useful life at that date. Means in the beginning of year 3, if the total life is 20 years, the remaining life is how much?
18 years.
18 year. 18 year. 18 year. थोड़ा आप लोग फटाफट बोलिए. 18 years.
Yes, sir.
On 1st January year 4, now we have reached to the next year. 1st January year 4 means after
3
end
years
of
of
3 years.
depreciation.
An impairment review showed the machine's recoverable value to be rupees 1 lakh and its estimated remaining useful life to be 10 years. After 3 years means in the beginning of year 4, an impairment review showed the machine recoverable amount to be rupees 1 lakh. The machine recoverable amount to be rupees 1 lakh and the estimated remaining useful life to be 10 years. Okay. And the estimated remaining life to be 10 years. क्या मतलब है इसका?
We will
क्या
have
लग रहा है?
to
Depreciation change
impairment.
होगा sir from upcoming years.
It is a change in accounting policy or change in accounting estimate?
Estimate, accounting estimate.
Accounting estimate, sir.
Anyone who is thinking that it is change in accounting policy? Anyone? So let me look at the chat box also. So Megha is also saying change in accounting estimate. It's a change in accounting estimate. Okay. It's a change in accounting estimate. Okay. It has to be applied retrospective or prospective?
Prospectively.
Prospective.
Perspective.
Right. So in the year 3, there was an increase in the value. In the beginning of year 3, there was increase in value. It means there was a revaluation surplus. Okay. Asset had been revalued. ना लिखा है कि asset revalue हुआ. तो revalue हुआ तो क्या करेंगे? Revaluation surplus बनाएंगे.
Yes, sir.
And in the year 4, there is an impairment because in the beginning of the year 4, it becomes 1 lakh rupee. Recoverable value will become 1 lakh rupee. तो क्या होगा? Impairment होगा. And going forward, you have to, your life is also, so life was 20 years. In the beginning of year 3, the remaining life was 18 years. In the beginning of year 4, the remaining life should have been 17 years. But what is the remaining life? It's 10 years.
10 years.
Remaining useful life is 10 years. So your depreciation will be increased prospectively. Now you need to calculate the carrying amount of the machine on 31st December year 2 and the revaluation surplus arising on 1st January year 3. फटाफट बताओ, आप बता चुके हो.
ये 2,16,000.
So first of all, what is the carrying amount? 2,16,000. What is the revaluation surplus?
34,000.
34,000. What is the accounting entry?
Asset account debit to revaluation surplus.
Revaluation surplus.
OCA account.
OCI account.
OCI.
Asset account debit to revaluation surplus OCI account, right? So calculation of carrying amount of machine at the end of year 2, cost of machine 240, accumulated depreciation 24, carrying amount 2,16,000, carrying amount in the beginning of year 3 216, revaluation done at the beginning of year 3 250, revaluation surplus 34,000, right? Revaluation surplus 34,000. Clear?
Clear.
Clear
Yes,
in
sir.
mind? So what is the revised carrying value at the beginning of year 3? What is the revised carrying value?
2,50,000.
2,50,000 is the revised carrying value. 2,50,000 ही तो होगा revised carrying value. And now this 2,50,000 has to be depreciated in how many years?
18 years.
18 years.
18 years.
18 years.
18 years. Let's go to question number B. Question number B is saying the carrying amount of the machine on 31st December year 3 immediately before the impairment. The carrying amount of the machine on 31st December year 3 immediately before the impairment. Right? So year 4 में impairment था. So 31st December को what will be the carrying value? बताओ.
2,36,111.
So 2,50,000 is the carrying value at the end of year 2 or beginning of year 3. So 250 divided by 18, that will be the depreciation, right? So depreciation for year 3, 250 divided by 18, 13,889. Carrying amount at the end of year 3 is 2,36,111. This is the carrying amount.
Yes.
Now, what is the ask of the third part? The impairment loss recognized in the year to 31st December year 4 and its treatment thereon. Now the question number C is asking, what is the impairment loss which you will recognize in year 4 and what is the accounting treatment? This is the question which it is asking. Right. So what is the impairment loss in year 3?
1,36,111.
Yes. So when machine is revalued on 1st January year 3, depreciation is charged on the revalued amount over its remaining expected useful life. So valuation at 1st January 250 in the beginning of year 3. Depreciation 13,889. Carrying amount at the end of year 3 and beginning of year 4 236. Recoverable amount 1 lakh. What is my impairment loss? 136,111.
Yes.
136,111. Right. Now I have some revaluation surplus also in the beginning of year 3. How much is the revaluation surplus?
34,000.
34,000 I have the revaluation surplus which I have computed here. 34,000 is my revaluation surplus in question number B. In part B, 34,000 is the revaluation surplus. 34,000. Yes. So what should I do first?
Adjust the revaluation surplus.
From 136,111, what will I do? I will credit asset by 136,111. I will debit my revaluation surplus OCI by 34,000 and the remaining amount I will take it to the P&L impairment loss. 1,02,111. Okay. This is what I'll take to the P&L. Right. Is that clear? Is that clear?
Clear.
Yes, sir.
Yes,
Very
sir.
much clear?
Very much clear.
Absolutely clear?
Absolutely clear.
Fundamentally clear?
Yes. Fundamentally clear also.
Fundamentally clear. Yes. Part D. The depreciation charge in the year to 31st December, year 4. Now it is asking
10,000.
after impairment loss, you tell me the depreciation for year 4.
10,000.
10,000. So revised carrying value after impairment is how much?
1 lakh.
1 lakh.
1 lakh. So whatever is the recoverable value, that will be revised carrying value, 1 lakh. And what is the remaining useful life? 10 years.
10
So
years.
10,000 is your depreciation charge is your 10,000, right? And if you will see, this question has given you an assumption also. During the course of utilization of machine, the company did not opt to transfer part of the revaluation surplus to retained earning. Right?
Yes, sir. Every year.
Tell me one thing, instead of writing this, if the question would have written, during the course of utilization of machine, the company has opted to transfer part of the revaluation surplus to retained earning, then what you will do?
The extra depreciation transfer to.
Yeah, can you go one by one? And so Saminathan, you will be second, okay, this time. Any other student first? Somebody was trying to explaining. Yeah, please go ahead. No, Saminathan, you may please go ahead. Yes.
Can I?
Yeah.
So the company it has to be transferred to revaluation surplus. It is not up to the company to opt for not to transfer.
Friends, in day 16.
Sir,
जरा याद उन्हें भी कर लो जो लौट के घर ना आए. Have you heard that song, Vande Mataram song, or what that song?
Yes, sir.
जरा याद उन्हें भी कर लो जो लौट के घर ना आए. हाँ जी. So friends, in day 16 and in days 30, to remember that concept.
Yes, sir. I will tell you, sir.
Yeah, please.
The thing is that the extra depreciation due to the revaluation. Say example, the regular depreciation when you are doing it 2,40,000 divided by 20, it's coming 12,000. Because of that revaluation on the year 2, it's came to 2,50,000. which means that extra depreciation we are going to charge by remaining useful year 18 years, 13,889. 13,889 minus 12,000, it comes to 1,889. That is a extra depreciation. We can move to retained earning. That revaluation from the revaluation reserve we can debit to retained earnings. That only. But next year, when you come to next year on the fourth year, third year end, it's again it is came down. The subsequent year it is not needed. Only 1 year it is needed.
Absolutely great. I must say, you have explained better than me. Okay, I must say that. Yes. So Sanjay and everyone, Ind AS 16 and Ind AS 38 has given you the treatment of revaluation surplus. And what it says that whatever revaluation surplus is there, it can be utilized in two manners. Number one, when the underlying asset on which you have computed revaluation surplus has been disposed of. In that case, whatever revaluation surplus is there, the entire revaluation surplus will go to retained earnings at the time of disposal of underlying asset. But during the continuity of the tangible or intangible asset, Ind AS 16 or Ind AS 38, it is not mandatory to transfer revaluation surplus to retained earning. It is at the discretion of the company, discretion of the entity. If you have opted that yes, I want to transfer my revaluation surplus to retained earning during the life of the asset as well, in that case, you have to transfer on a pro rata basis. Pro rata basis means you have to transfer whatever is the extra depreciation you have incurred in your P&L due to revaluation. Only that portion you can transfer from revaluation surplus to retained earning every year. Like Saminathan has explained, sir, the cost was 2,40,000. The life was 20 years. Depreciation was 12,000. Had there been nothing, had there been no revaluation, the depreciation would have been 12,000 only. But sir, since in the beginning of year 3, means at the end of year 2, the value has been increased by 2 lakh to increase to 2,50,000, my depreciation hit has been increased from 12,000 to 13,889. It means now I have to charge 1,889 rupees extra to my P&L. And friends, to the extent of that extra, I can transfer from revaluation surplus to retained earnings. Right? So in that case, if the question will tell you, if the company has opted to transfer, in that case, your revaluation surplus has also gone down from 34,000 minus 1,889. So in that case, your last treatment, which you have done in part C, your 1 lakh rupee is the recoverable value, 236,111 is the carrying value. So you don't left with 34,000. You left with a revaluation surplus of 34,000 minus 1,889.
1,889.
Okay. This is what you left with. Okay.
So
is that clear?
Yes, sir.
I think it is absolutely clear, right?
Yes, now clear, sir. Clear.
Absolutely clear?
Absolutely clear.
Completely clear?
Completely.
See, that one concept of Ind AS 16 has a major implication. Yes or no? If you will consider that no, the question has confused you and you have done that, so probably your answer may be wrong. Okay? While there is a stepwise marking, you will get a answer for the steps which you have performed right, but for the steps which you have not performed right, you will not get the answer. So friends, we also did 2 questions from this Word file, and see, this question has brushed up your concept of, revaluation, impairment, OCI, revaluation surplus, transfer. Okay, this question has brushed up those concepts. Correct? Okay. Clear? So friends, since morning, what we have covered today, we did a complex question on value in use, that cash inflow, cash outflow, right? Then we understood the meaning of cash generating unit. Cash generating unit is the smallest identifiable group of asset which can generate cash flow independently from the other assets. Then friends, what we have covered then? We have covered the concept of impairment loss. It has to be charged to P&L. If revaluation model is there, revaluation surplus is there, adjust that. Over and above, take it to P&L. Then we discussed the concept of deferred tax asset and deferred tax liability, right? Then we discussed how to allocate the impairment loss. So impairment loss has to be allocated first on the goodwill if it is there, then on the other assets on a pro rata basis. While allocating on the other asset on a pro rata basis, you cannot allocate impairment loss more than the individual impairment loss on that asset. For example, if there is no individual impairment loss on the asset, then you are not required to allocate any impairment loss on the asset just for the sake of allocation. Okay, right? So friends, then we discussed that if there is a cash generating unit, it is having goodwill, intangible asset having indefinite life, intangible asset not yet available for use. In such kind of cash generating unit which is having these three kind of asset, you have to do more impairment testing if there is an indication. If there is no indication, still you have to do mandatory annual impairment testing. Okay, friends, what about the CGU where these three assets are not available? Then if there is an indicator, you need to check the impairment testing. Otherwise, you are not required to do the impairment testing, right? So we have seen the allocation into three different parts. Okay, we did one question also. So friends, I hope you guys have understood, you guys have realized. I hope you are now very much comfortable on Ind AS 36 impairment of assets. Two big concepts are remaining. One, corporate asset, and the second one is reversal of impairment loss concept, right? These two concepts I'll cover in the next class. But whatever I taught you so far with at least 7-8 good questions and a lot of practical examples, are you able to understand the concept? Are you able to understand the practical problems, right? And are you able to appreciate the logic behind those concepts? Like I took you the logic of the goodwill, right? Why goodwill has to be written off. Yeah?
Yes.
Yes?
Yes,
Absolutely clear?
completely.
Any
Completely
question?
understood.
Any doubt? Any question, Ravinder? Any question, Neha?
No, sir.
No question? So don't hesitate in asking question. If you have any question, don't hesitate in asking question. Okay? Because you all are student. You will ask question, you don't ask question, still you will be a student till the time you crack the exam. And for cracking the exam, having a clarity on the concept is very, very, very important. Okay? Right? Akshay, do you have any question?
No, sir. It's clear.
And have you understood all the concepts which I have covered today?
Yes, sir. Yes, sir.
Megha, Chitra, Ravinder, Bibhu.
No
Okay.
question.
Okay. So everybody has confirmed that no question and you guys have understood. My dear friends, target for 100. Believe me, in your financial reporting subject, target for 100. Always target for 100. Right. भगवान की श्रद्धा है 90 आए 85 आए 86 आए 90 आए 95 आए it is the God's prasad. Okay, but target for 100. Believe me. This is one of the subject which will help you in your entire life. And good part, whatever you are getting, whatever you are learning, this is all practical, not only theoretical, all practical. Right? You remember that third balance sheet concept? I have shown you ONGC annual report.
Yes. Yes.
ONGC annual report. So ONGC annual report is one of the largest company of India, listed company, government company. So what you are learning, it is printed on ONGC annual report, right? So just target for 100 and believe me, whatever you will get, that is the destiny. That is what you are supposed to get, but not less than 3 digits should be your target. Believe me.
Yes, sir.
Okay. Yes. Solve all the questions from ICAI Board of Studies material. Whatever Excel file I have shared so far, just get through with all the Excel files. In my Excel file, I'm writing concept and then I'm solving a question also. Right? This is my pattern of teaching. And probably in the last few classes, you guys have understood my pattern of teaching also. Yes?
Yes.
So it is printed there. So you can refer those aspects also. Okay. Yes. Thank you so much and have a good day. Have a great day and stay safe, stay happy. Bye-bye. Take care.
Thank you very much, sir. Thank you. Same to you. Happy
Okay, sir.
Teachers' Day in advance.
Happy Teachers' Day, sir.
Thank you. Thank you. Yes. Ashokji, session over. Thank you, Ashokji.